The markets closed early today due to the holiday that we're going to be celebrating in the United States tomorrow, 4th of July. So volume was a little bit lighter than normal here today, but there were still a few impactful moves that I want to discuss during the video tonight. In particular, the S&P 500 went back to a bearish posture. And I do want to focus on an area of the world that's really been struggling for a bearish trade application example for tonight. So let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's July 3rd, 2018. First of all, if you are new to these videos, welcome aboard. We're grateful to have you in our audience tonight. Remember, you can always subscribe to our YouTube channel. You can also leave us comments and check out our description area for a link that will allow you to sign up for our email distribution list that'll entitle you to not only knowing when these videos are uploaded to YouTube, but also gives you a heads up on which stocks have bullish and bearish clusters on the S&P 500. In addition to YouTube, we're also heavy users of Twitter. My handle is @BrandonVanZee, all one word. Make sure you're following me there. And then lastly, we are also on Facebook. Check out that group web address that you see on the label there in front of you. All right, let's go ahead and dive into the market analysis now. As you can see, I've got the S&P 500 pulled up on the screen in front of us, and we did fall 13 points here today, so it was a fairly aggressive day. Again, keep in mind it was holiday shortened session, so it may not have been the most volume-oriented move that you've ever seen, but we did head into the holiday weekend with a little bit of a sour note there. You can see that that did change the picture from a market forecast perspective. For those of you that are newer to these videos, when you're looking at this chart, which is chart 4A, for those of you that are premium market scholars that have gone through my charting tutorial, if you want to follow along with this presentation, when you're looking at this chart, when you see the dark pink background like we see right now, that means that we've gone back to a bearish posture. Not only a bearish posture, but a strongly bearish posture. That's the difference between the dark pink and the light pink over here. And that occurs when you have that intermediate term line down below 50 and heading lower. If it were just up here, that would be weakly bearish. But because we're down here below this 50 zone, we consider that strongly bearish posture at this point. So we'll see if we can kind of turn things around after the holidays up and through. But right now, there are some signs of worry out there just because we're spending more time below that moving average here in the last couple of weeks than we normally have been accustomed to recently. So we're going to keep our eye on that, but right now we do have that bearish posture. If we were to take a look now at our 4 grid, where we can take a look at the other 3 major indices in the United States, notice that all of them went to a strongly bearish posture as of today's price action. We had a 0.5% pullback on the Dow Jones today. Now that one's been in a strongly bearish posture for quite some time. But down below here with the NASDAQ, notice the NASDAQ was down 0.86%. So that was an even more aggressive move to the downside. And it just got its strongly bearish posture back today, somewhat similar to the S&P 500 in that regard. And then in the Russell 2000, remember that's your smaller cap index in the United States, we've had a strongly bearish posture for a few days now, and that continues at this point. So again, kind of an ugly day across the board. It is worth noting that the Russell 2000 actually did close higher today. It was up by 0.3%, so somewhat bucking the trend of the other 3 major indices that are out there. Let's go ahead and take a look at our next chart setup, and this will be our 3 green arrows chart setup. This is 4C here that we're looking at. And in the case of all 4 of these charts right here, notice that we have 3 red arrows across the board. That's what that light background color in the pink there is signifying for us. If you wanted to count them out on your own, of course, you could see that. So just as an example, here's the Dow Jones arrow number 1, arrow number 2, arrow number 3. We're looking at that on a 30-day moving average up at the top. We're looking at a MACD here in the middle and a stochastics down below. Generally looking for strong price action if you want to be bullish on the markets, and right now we're seeing the opposite of that. So it's kind of the same story as what we saw with the market forecast outlook there for the first setup. As we take a look at our next charts, this is our 1040 crossover method chart here. And in this case, not a whole lot to report. Remember, this is not a very sensitive type of a trading system here. It kind of lets you eliminate all the noise that's out there and just latch onto the major trends. Right now, we continue to be bullish from a longer term perspective using these weekly candles. What we're looking for any change here is for the orange line, which represents a 10-period exponential moving average, to cross below the blue line, which is the 40-period exponential moving average. We apply this to weekly candles on the chart here right now. The closest one to crossing over is that Dow Jones. We're going to keep our eye on that going forward, but even that'll take a couple weeks at a minimum for the moving averages themselves to cross, even if price action goes below the blue line in this case. Let's take a look at some 12 grids now. All right, so this first one's going to be our intermarket analysis 12 grid. And as you can see, we've got a mix of green and red boxes out there. Remember, the green boxes in this case would signify bullish intermediate posture using the market forecast indicator that you can find on a Thinkorswim platform. And then you can see over here with the red background color, those pink charts right there signify bearish posture. And so in the case of the preferred stocks, they're doing well up to the upside. On the other hand, we see that things like master limited partnerships are starting to slip a little bit here. Remember, they were actually pretty strong a couple months back, but after getting this bearish cluster signal right here, or this overbought cluster, however you want to describe that, we did see a pullback, and now we see master limited partnerships actually trading below a falling moving average, and that's why that moving average is now colored red in this particular case. Crude oil has been probably the story of the first half of the year. You'll notice that crude oil was actually up today. It was a pretty wild trading session for crude oil. When it was all said and done, we finished up just a hair. It was up about 0.31% today. So not an outsized day, but the fact that it held up in the face of other risk assets like the stock market struggling is maybe somewhat noteworthy. I would say that the U.S. government long bond continues to show some resiliency and some strength right there. You can also see that muni bonds continue to be somewhat resilient. The U.S. dollar is still trading above a rising moving average. Now, we had a great discussion today in my dividend growth investing class, and by the way, thanks for everybody that attended. I was blown away by the amount of attendance I've been getting this week after, of course, our public launch of Market Scholar, so thanks for everybody in attendance there. But we talked about two high-quality dividend aristocrat companies today in that class, and one of the things that came up in the analysis of it was the strength of the U.S. dollar. Both of them are very internationally based, and what we find is that when the US dollar is strong, it kind of puts a lid on the profit potential of a major multinational organization in many cases. So anyway, if you are a Premium Market Scholars member, feel free to check out that recording from earlier today if you want to hear that discussion. Let's go ahead and take a look at our next 12 grids now. Let's take a look at our US sectors 12 grids in this case. This is chart 4G here. And as you're looking at this, it's kind of interesting because you can kind of see it's broken down kitty corner from the lower left to the upper right. All those charts in kind of the upper left portion of that breakdown are red, and then all these charts stacked down here in the lower right-hand corner are green. And so again, the red is bearish posture, the green is bullish posture. And so where it stands right now, we do have energy, we have healthcare, we have telecom, and we have utilities and real estate as our bullish sectors that are out there currently. All the rest are bearish. The one I did want to point out, because it will be impacted by our trade application example a little bit later here, is technology. Notice that technology was down 1.18% and is now trading below that moving average there. That moving average is still kind of trying to decide if it wants to go up or down, but the point is tech has shown a little bit of a slippage in its strength here recently. In fact, some of you that might have been looking at my sector selector here recently, let me see if I have that pulled up. If I don't, I can probably pull it up here pretty quick. Let's do this. I'm going to go ahead and pull up marketscholars.com, and on this one, this initial version of the sector selector, I did make it available to the public. So whether you're a subscriber to us or not, you should be able to access this very first one. Going forward, you will want to be a subscriber to tap into the resources. But here you can go into the blog area, and then as you're scrolling a little bit lower here, where was it? There it is, sector selector. This was posted on June 30th. And as we go into this, you can kind of see the breakdown of the various sectors that are out there. And the one that's important for this conversation is technology. Now notice that technology was the #1 sector here just a few weeks ago. It slipped all the way down to the #5 ranking as far as the strength goes. And how I'm kind of stack ranking this and judging whether a sector is strong or not is in comparison to other sectors. It's basically on a relative basis to the other sectors in the market. Remember, there's 11 different sectors out there. So this bottom portion of my sector selector will kind of give you that understanding a little bit more, because you can see what we're basing those decisions off of up here at the top. So it's a 52-week high percentage, 3 green arrows percentage, bullish market forecast posture percentage, 1040 crossover percentage, 3-month price, 6-month price, shaken money flow, CCI, rate of change, and RSI. So the point being, you can see here with the technology sector, which is kind of firmly right there in the middle at the #5 slot, it's doing well on the 1040 crossover method still. It's actually the leading sector from that perspective, and it's second best from a 6-month price perspective, but it's really starting to slip in some of these other rankings here that I like to keep track of. And so that's a little bit out of the norm. We had seen for a couple of years, quite frankly, technology kind of being the leading sector out there. So it makes you wonder if it's time for it to kind of relinquish its top role as a sector to some other ones that are out there. So anyway, be aware that technology right now does have a bearish posture. Let's go ahead and take a look here at, since we're talking about sectors, let's take a look at the sector ETFs and see how they did just today alone. And you can see that the energy ETF, XLE, led the charge. They were up about 0.63% today. On the downside was that technology space, down 1.26% on XLK. So yet another indication that there's some slippage in some of those technology names there. If we wanted to zoom in on some of the details of some of those big movers, let's go ahead and start with the energy space first. Now these are specifically within the S&P 500. You can see that Marathon Oil was up nearly 3% today. Apache was up 2.5%. Noble was up 2% as well. So some pretty big movers there within the energy patch. And then on the downside within the technology space, let's go over here, take a peek at the technology breakdown. For this, I'm going to go down to the bottom to see who the worst performers were. And Micron was down 5.5%. That's one that I know a lot of folks talk about because it's got such a cheap PE ratio, trading at only 6 times earnings. But you know, it's a very cyclical stock as well, being a semiconductor company. So it was taking it across the chin today, as were some of its compadres there in the semiconductor space. Qorvo was one, and Lam Research was another one. So the bottom 3 technology stocks all were within that semiconductors industry as well here today. So that does bring us into our trade application that I wanted to concentrate on here today. So let me get back over here to our charts. And actually, I wanted to show you one more thing before we get started. Let's go to the foreign stock markets. I must have skipped over that 12 grid. There we go, because I wanted to show you that China was really struggling. Now that's something that, of course, David and I have been talking about for several weeks at this point during this video, so that's not new news. Reason I wanted to point it out was simply because that's going to be part of the theme of the trade application example here for tonight. So notice that China is the chart in the upper right there and has really fallen out of bed here with a lot of these trade war rumors that are floating around here. So what I thought we would do tonight is kind of exercise a bearish type of a trading idea that kind of combines the themes of weak China stock market and weak technology pricing. And so, of course, one of the big technology stocks from China is Baidu. And so let me come over here to a chart, just 4A in this case, and we'll bring up Baidu. And we'll take a peek and see how it's been shaping up here recently. Not a big surprise to see it with a bearish posture. Notice that its green intermediate line on the market forecast tool is now hanging out in the lower reversal zone there, telling us that we do have a strongly bearish posture currently on Baidu. And you can see it's clearly trading below a falling moving average as well. That's why that moving average is red right there. And so we'll take a peek at maybe doing a bearish trade on it. Now, it almost got set up with one of those bearish intermediate confirmation signals. Now remember, David and I talk about the bullish intermediate confirmation signals quite a bit on these videos. They're a lot more popular, but the bearish ones are a little bit more rare. And that would have occurred if the red line would have been in the upper reversal zone. Notice the red line, the momentum line in this case, is sitting right at 79.42. So remember, the upper reversal zone would start at 80.00. So it's literally within spitting distance of that. If it would have been up less than even a point, you would have actually seen a bearish intermediate confirmation signal. And remember, when you're thinking about bullish intermediate confirmation signals, it's a buy the dips mentality. So you would flip that on its head if you ever see these types of signals that are closer to the bearish intermediate confirmation signal. That's a sell the rips mentality. And you can see Baidu did rip yesterday, ripped higher, continued its ripping higher today, but then actually kind of reversed course. And while it did close up by 18 cents today, notice that that candle is not the best looking candle on planet Earth either. We did close near the lows of the session there. So it didn't really have a lot of follow through after yesterday's big day. So right now, the path of least resistance for it continues to be sideways to down in this particular case. So what I thought we'd do is concentrate on a bear call spread. And so let's go over here to our trade tab. And where I'm going to concentrate is on 31 days until expiration. A lot of times we find that that 30 is the sweet spot. So this one will actually be a weekly contract. Remember, you don't always want to be trading those weekly contracts unless it's on a big name company. This one does qualify. So let's go ahead and concentrate on the 30 delta here, which would be the 262.50. I'm going to right click on that. I'm going to go to sell vertical, and notice that down below it loads up our trade, and this $2.50 wide spread is going to give us a credit of 57 cents, and that's right on that kind of border that a lot of times David and I will shoot for, which is a 30% return on risk. And remember, if you ever wanted to calculate that for yourself, it's pretty straightforward to do. Just get your calculator out there, click confirm and send once, and then take your max profit. We're just doing one contract here, so take 57 bucks in this case, divide it by 193. So max profit of 57 divided by max loss of 193, and you can see that that return on risk would be 29.5, or if you round it up, that would be a 30% return on risk. So with that, let's go ahead and send that off. And as a reminder for those of you that might be newer to what we're trying to accomplish with that, is we're basically saying we want this stock to stay below 262.50 for the next 30 days. Now 262.50 is about right up here where I'm pointing, so it would have to start spending a lot more time above that moving average if it were to jeopardize our trade. So we'll see how that goes going forward, but we're going to wrap things up fairly close or fairly quickly here tonight. With it being a half day, I don't have as much to evaluate either. And of course, want to wish you guys nothing but the best for your 4th of July holiday. I hope you have some excellent barbecuing and ice cream and fireworks in your future. Enjoy yourselves tomorrow. Be safe. We'll get back into the swing of things the following day. Remember, there will be no market outlook video tomorrow, but then on Thursday, we'll be back at it again. If you get value out of these videos, make sure you go out and click like and retweet on our Market Outlook tweets on Twitter, and also give us a thumbs up there on YouTube if you don't mind. All right, with that, have yourself a great rest of the day, and we'll see you all on Thursday. Take care. Bye-bye.